Concerns about a debt default may be spooking the markets, but my next guest remains bullish and sees Dow 40,000 in the next 18 to 24 months. Joining me now is Neil Hennessey. He's the chief market strategist and portfolio manager at Hennessey Funds. Neil, welcome back. It's good to see you again.
Thanks, Kelly.
Would you describe this as sort of unbridled enthusiasm for stocks? And tell me what you make of this kind of fourth quarter choppiness that we're seeing.
Well, I think people just have to look at the total picture and put it in perspective. I mean, if you look at what's been happening in the marketplace, and now the headlines are tech are getting beat up and they're getting killed, well, they should have. If you look back at 2020 market, the NASDAQ was up 45%. But if you take out 6 of those companies, Facebook, Microsoft, Google, Apple, Tesla, Amazon, the market was only up 21%. The same thing's been happening this year. What I think's going to happen is we don't have euphoria in the overall marketplace. We have it in pockets of the marketplace, but not the total marketplace. And people are going to start to go back and start to buy quality in undervalued companies.
Tell me about energy, Neil. What do we do with this one? What's your own view on it? Because this isn't sort of one of those stories of, hey, you know, the equities are mispriced relative to the crude. This is like global energy crunch, game on, kind of worrisome.
Well, as you know, Kelly, we have the Hennessey gas fund here. And interesting enough, if you look at natural gas, it's at $6 BTU. I mean, it's just crazy. And it went from a couple of bucks to there. So you look at the utility companies, they're going to continue to produce a lot more profit and revenue, which in turn is most likely going to raise the dividends in that arena. We are having a short-term spike in energy costs that are scaring people. But you take that and you take it, put it with the other headlines of stagnation and this and that. But look at it. We still have mortgage rates under 3.5%. We have a 10-year Treasury that's at 150, and I know people are saying, God, it's really spiked. Kelly, it went from 130 to 150. I mean, it's a 15% move, but it doesn't do anything to the economy. So when you put everything together and you look at what's happening, the Dow Jones is selling at 19 times earnings. That certainly is not an overvalued marketplace. On top of it, we're just coming out of this pandemic. Can you imagine once car sales start to spike back up? General Motors was down 1/3 amount of cars they sold. So we have this supply chain problem that's going to solve itself over time. And the next thing you know is we're going to be off to the races, and companies are going to make that much more money. They just can't help making more money with the amount of money sitting in the consumer's pocket, which is over $2 trillion.
Shepard Smith here. Thanks for watching CNBC on YouTube.